Hello guys, welcome to a Trading Parrot. Bitcoin is right underneath the all-time high, knocking on heaven's door. And people want to know how far are we, or are we going to get an actual short squeeze of similar proportions of what we saw in the biggest breakouts during this bull market? We'll talk about that. We'll talk about realistic levels. We'll clear out all the shit that you've been consuming from other channels. Do not worry. We'll keep it real as usual. We'll compare previous breakouts and focus on new levels that we could be about to achieve on the 4-hour and daily time frame. And of course, the video is not just going to be hopium. We'll identify where is the risk, what are the levels that we need to defend for continuation by sneaking into the order book and doing proper forensic analysis. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. If Bitcoin can get into an all-time high, can we get 1,000 likes in this video? That's definitely gonna help spreading out the message of where is the actual information that make people profitable in this market. This week we launched a new partnership with 2bit, and what better way of starting that with $30,000 in bonus, of course based on trading volume and deposit size. But even if you don't deposit anything, you just open the account and get $50 for free. That seems to be a pretty good deal, and together with being non-KYC exchange, I think it's a great alternative to consider. Martin finally found who was moving these coins of over 7 years old from one wallet into another, and apparently it belonged to Bitcoinnica. A hacker a while ago stole around 8,000 Bitcoin from them, and it started for the first time after 7 years plus moving those coins. Martin even mentions that he thinks that these were moved into wallets that are associated with money laundering liquidations, companies that help hackers to distribute under the hood. Well, let's hope that this is caught by authorities wherever this is happening, and that the distribution is actually stopped, because it's around $1 billion in Bitcoin. The worst case is that they distribute it into some coins like Monero and it starts spreading in different wallets, and then it becomes really difficult to track. But at that point, it's no longer going to be Bitcoin, it's going to be probably another asset, and that is what I'm worried about. Bitcoin may tap 116K in July amid perfect storm of macro catalysts. Primarily the expectations that a new Fed chair that be more inclined towards rate cutting. On aggregated open interest, very quickly we had a breakout from the bull flag, so now we are looking into a revenge rally into 37 billion. Currently, we are at 35.3 billion, so that is just 2 billion away. At the moment that we hit and impact this ascending trend line that we lost as support, the most likely scenario at that point is a rejection. So we need to be keeping our eyes very open as we approach $36.5 billion in aggregated open interest. I have updated the Bitcoin status on all the different time frames. We are meters away, of course, from the range top on the 4-hour, but stay for the chart because there's gonna be some insights. I wanna share something that has fundamentally changed on the 4-hour time frame versus my previous analysis. On the daily, the breakout of the RSI is intact, and we confirm the retest successfully. On the weekly, we are ongoing with a breakout and a potential weekly close all-time high. Let's go into the 4-hour. There's a bunch of things that are new in the chart that I want to share with you, starting with this dotted line that perfectly matches as support, then as resistance, and if we meet again around here, which is more or less 111K, possibly even 112, an all-time high, depending if we back down below the dotted line. The perfect level at the moment is 110.7, but if we carry on below the resistance, we could even continue touching this line. Who knows until when, but I'll keep an eye on this on the 4-hour time frame. There are some levels that we're going to monitor today. starting with the 83. This is the new kid in town. I didn't have this level before. We were talking about top of the range at 73, but that is assuming that we remain within this structure of a descending channel. If we manage to break out from here, there is still upside into 83.71. The reason for that is if we connect the highs of 12th of November, which was around 90, with the 85 that we produced on April 23rd, then we could potentially be within, again, a macro descending channel. This one is the micro, and this one is the macro. The larger one allow us to get into 83.71. So let's look at those prices. We are gonna get a little bit of a hopium overdose this morning. I really wanna share the upside potential. So within the microstructure, the descending one that had an RSI of 70 something, that brings the price into 111.9. That's pretty much around the all-time high anyways. So if we hit that resistance there and we stop, we could potentially put just an all-time high and have a little go with the liquidity that we have around here. Maybe if we get a little bit overextended, we can get into the red as well. But in order to go beyond that, in order to take all the short-term liquidity, possibly around 117, 118, we need to produce a breakout beyond the green line. So we need to go beyond 73 RSI on the 4-hour and start filling the gap between 73 and 83. At 83, the price can get into 117. So if we were to repeat the past performance of 90, 85, and the linear regression that is calling for around 83, price can get into 117. So now, if you've been watching the channel for over a year, you probably know how RSI works. And guess what? Most people do not know anything about RSI. All they know to say is RSI is for beginners, but they really don't know a crap about RSI. So whether you're new to the channel and you want to join the team of people that actually fully understand it, or you've been more than a year in the channel, good for you. Because at those high levels of 90, 85, and 83, the price doesn't stop. We enter a new stage, which is momentum peaks first, price carries on at the cost of bearish divergences. So from this price of around 82K, we still get an upside of 33%. Let me calculate it properly. I think it's a little bit less. It's 27%. So there's an additional 27% from the time the RSI peaks at 90. Then in here we peak at 85 and the price makes around 18% additional upside at the cost of bearish divergences, which you can already see. Bearish divergence, price higher, and the higher highs are non-existent in this area, just lower highs. So we get 27 additional and then we get 18. So there are two trends that you need to identify. The first trend is the diminishing highs of the momentum, 90, 85, 83. Second, from those peaks, we spend a diminishing percentage in bearish divergence territory, 27, 18. So are you still with me? 27, 18, let's do a linear regression of that. That gives us 9%. Assuming, I'm being generous and I'm gonna do a linear regression, 27, 18, and I'm gonna go with 9. So now we can use that 9% from the top of assuming that we once again hit 83. If we hit 83 and we move 9% beyond that, from 117, we get to roughly 127. If we do that, we consume not just the first long-term bucket that we have in here, but also the second one, which is right there. It ends at around 127 at this range. Now let's go back in time. It's always good to pay a visit to the previous pump. Let's remove this one from the range and let's focus on 2024. We have bucket 1, bucket 2, diminishing, and bucket 3 at 86. So you get a good chance that we could be seeing additional upside, because The recipe is very similar, right? We have one that can stop at 112 and can turn this into a double top. One chance that we repeat what we did in here, right here with another double top. If we carry on and we enter into the red, we are basically entering into the equivalent of 76. When we get into 83, we are already peaking in momentum and we start declining with an additional 27%. In here, the additional was just 18, and if we were to do just 9, we get into 127. So that is within the range, right? Just being realistic and copying previous performance, which doesn't guarantee future one, but it gives us a realistic range to play with, not to swallow fully. All right, now that we have an overdose of opium, you're probably trembling. You already spit your beer or coffee. By the way, let me continue with my coffee. Let's look at the RSI levels. We talk about the 73, we talk about the 83, and we have a 24 in here in case we need to break the glass and extinguish a fire. So the first one was at 109.6, which we have already hit, and we are kind of battling as we speak. We're also battling with this new trend line I spotted this morning at around 110. The second one is 111. And of course the top at 80 something, which is at 117. The go to hell level at the moment is 98.7. Let's go into the CPR. You can see that it looks very healthy. We already have a target talking about 111, which more or less is around the same level as the first resistance in the month of July. On the daily time frame, things are looking healthy. Potentially today we could have a new high in terms of momentum. That is additional confirmation for the retest that we just have on the 1st of July. Upside to 85, it's on the table. And it's at the moment sitting at around 137k. That is a Fibonacci extension of 1 at 136 in confluence, and the golden pocket at around 160. That is from this bull flag that we just formed. That doesn't look anymore like a bull flag. It looks like a double bottom. Actually, I'm just seeing that. Let me see what is the target of this double bottom. From top to neck, actually the neck is a little bit deeper, so that brings in around 121. I'm just gonna leave it there for later. MACD is also pretty happy, opening the mouth, new histogram levels higher than before. Weekly is looking also phenomenal. If we were to close Sunday like this, we could be seeing a new all-time high for a candle close. The previous one was 109.58. And at the moment, the price is trading at 109.6. Of course, that's what we want to see. We want to take out the previous highest close in history. That is what I have written in here on the weekly. And in terms of range for the weekly, remember that we broke out on April and we've been tracking after the double bottom in here and the reclaim of this line, a potential rally into resistance. The resistance has been moving all over the place. Now I have it at 75, 71.85 and then 77.48, and that gives us a range between 122 and 137. Someone was asking if we are now in a timing for liquidating shorts, in a short liquidation season or in a long liquidation season. We were heading into liquidations of longs at 14%, just like we were in here, but we never actually peaked beyond the 20% so far liquidating longs. Instead of that, we went into liquidating shorts, now sitting at minus 8%. So the question is if this is now gonna bounce back up into the highs liquidating longs, or if it's gonna put a new low liquidating shorts. We've been putting higher lows in here so far. Liquidating shorts at minus 20, then minus 17, and then 17 again, or 16, and this time is 8. The answer is unclear so far. We are in grid at 73. Let's see if we get by the end of today in extreme grid. I know that general markets are already in extreme grid. As we speak, we are pinching within the vacuum that we talked about in yesterday's video, which means that we have cleared the path to be able to reach 112. We already proved that 110 vacuum was going to be difficult, we already took it. So I will say there's nothing standing in the way really to now hit all those shorts. There's been a move of substantial selling wall from 120 that is shifted into 112 this morning. And in the last 30 days, now we can say that 103.3 has taken the lead in the largest liquidation of that time frame. You can see 111, give or take, is in here pretty intense with 3 levels very high. But in here we have a single one that is higher, and the cumulative is starting to be way higher than what we have on the top end. That is very typical to see when you are about to enter. If you enter into banana zone, we're gonna see a lot of liquidity in here, almost nothing in there. That's just a consequence of being in price discovery area. Do not assume that just bigger in here necessarily means right now we will take it. It might take some time. And people are asking, are we really now in a short squeeze? Have we already entered a short squeeze? And you know when you know. But let me give you a few hints to understand whether we are in a short squeeze. First of all, a short squeeze is identifiable because of the amount of high open interest. We do have that. I'm going to show you in the order book. We'll do forensic analysis. And we do have it. So checkbox, yes. Do we have that for the recipe? Yeah. First ingredient. Negative funding rate is necessary. We need overcrowded shorts. Do we have negative funding rate? Not as of now. But we might get a little bit more if we get higher in the price. So we need to wait for that. We cannot check that box. Explosive price and volume is necessary as well. When we were pumping in this area, this is part of the short squeeze. I will say that with this pinching here of 73, when we hit the first liquidity in this area, the incremental amount of liquidation pulls to the upside was ultimately what brought the short squeeze in there. You can see the price action. There is no balance. It's just green candle after green candle after green candle, each one larger than the one before. It needs to be a vicious circle with extreme levels of volatility, completely different to what you see in this range in here. Then you have to see margin and liquidation calls making pretty much new all-time highs. So for example, in here we have almost 1 billion in green. We need to see way over 1 billion in the red in here if we want to mimic what we had in the previous short squeeze, like 1 to 2, 3 billion in a lapse of 24 hours to 48 hours. And the fourth aspect is technical divergence, which is what we call the banana zone. That means that pretty much every technical indicator is saying this is the top, this is the top, this is the top, and everybody enters in new shorts at any price with any size, and they all keep getting liquidated, adding more wood to the fire. At that point, you have to pretty much ignore indicators for a little bit, wait until the trend fully finds something to crash against, pick up the pieces, and then you say, okay, fair enough. Now we liquidated a lot of people, open interest took a big dip. We might be due now for some sideways. That's when you know it ended the full squeeze. On FAR charts, you can see that they rag pull 110. That is very clear. There is now liquidity at 112, 115, and 120 with 56 million. Not that much, really. That's 78 million at 110. I'm still unsure if it got filled. Let's go into BookMap and let's see if we can spot anything. At the moment, there is a battle going on. We just pinched around 110. And now with this retracement, we can see in real time, Binance Futures, Bybit, OKX, and BitGet, all of them aggregated. And we see a very even kind of fight in here in this silhouette. I'm tempted to say that there is in the immediate price action a little bit more of support from the longs. But if we go into 112 and we count all of this liquidity, we could say that the shorts also have a good case for stopping the price around that area. From the 4th of July into the 11th of July, there's going to be a massive sell from BookMap. 40% if you want to get access to this amazing real-time order book tool, which is a lot more than that. You can even use it for trading bots and stuff that you want to automate as well. And it does stocks, everything. You can use the QR code in the screen or the link in the description from the 4th of July. So just wait until that to open the link and then pick between 40% discount or other alternatives that are going to be available from that day. It's very clear to see on Market Monkey Terminal, the order book, at least on Binance Futures, I can see that this confirms my bias that in between where we are in 112, there is a decent amount of selling pressure there, and there is pretty equal kind of fight. When we were looking at BookMap, we were seeing an aggregated order book there, whereas in here, I'm just seeing Binance at this point in time. And we're entering now in forensic analysis of the order book. Let's start with this chart in here. You can see that the high leverage traders went nuts in here taking longs, and thanks to that, that caused this bull flag. They got taken out thanks to doing in average over 15x in leverage. That calls usually for local tops. The lack of longs in here is being highlighted in red, just like in previous times. They pull out as the price is pumping, and that eventually turns into either sideways or a local top 2. So we have both at the same time. We have high leverage, decline in the longs, and we have positive funding rates. So that means that we don't have enough shorts at the moment. There's a lot of longs relative to the previous days, and that is not necessarily good, at least for this current swing in the 4-hour time frame. Not necessarily calling for a top. No need to swear anything in the comments. Now, looking at this, the 10%, 1, 2, and 5 deviations of the price, we want to focus on how much support we have. You can see that in the price being in here on the 22nd of June, the top 4 squares were showing quite intense amount of support with percentiles of 194, 74, and 73 at different deviations. At this point in time, we are at a high, and where we have the most support is within 10% below the price with 70 percentile, and at 5% below the price with 52 percentile. 1 to 2% doesn't necessarily have a lot of support, as you can see in here. So that shows that as of now, at the time I'm recording the video, people are willing to buy the dip, but at a slightly deeper area. I'm also going to be including a little bit on high block capital of professional indicators that are only available in that tier in high block capital. So you better stay subscribed, because now I have access to the top professional hedge fund indicators in the market. This includes all the anchored CBDs, liquidation levels anchored as well. All those indicators that cost a heck of a lot of money and very little amount of people have access to. If you want to get access for that and you have the pockets really to get the professional tier on high block capital, there is a discount as well in the description. If you want to get a copy of my dashboards as well, just ask for it and I'll share the links. Up until today, I've been just using the advanced tier, but I'm starting to get really excited about the performance of these tier 3 indicators. When it comes to fair value gaps, you can see that this line that I just added today at the moment is the current resistance. Below the price, we have 3 fair value gaps new that join the party to these 2 that we left behind. So we have all the way down in here with motivation to clear some imbalances. Of course, if you enter into price discovery, like we did after exiting 2024, we left a lot of imbalances all the way in here, and it took a lot of time to come back to clear some of them. Okay, we still have this one at 74 that are untouched. Why? Because those overlap with the previous high, and Bitcoin this cycle has done that a lot. You look for a new range, you leave behind lots of fair value gaps, and then you come down and you clear only the ones up until the previous high. Modus operandi that eventually is going to get broken once we get into a bear market. Of course, at that point, we're going to clear a lot to the downside, I'm pretty sure. So far, we need to focus on these ones. If we put a topping candle in here, I will say the first and the second could be within the reach. particularly considering that we are now battling with the first order block. That's the first, that's the second and last. After that, we are off to price discovery, potential short squeeze, and all those goodies. I'm gonna do a separate general market video. The market looks a little bit flat today, I will say. Pre-market is slightly higher on the S&P, just 1 point. In that separate video, I really want to talk about the V recoveries, the performance of each individual instance that we have in the past. I'm going to look at this from the monthly perspective and comment on this big breakdown after a bearish divergence. So looking forward to record that too. Alright guys, thanks so much. Wrap up. Let's do a wrap up. I think at the moment we have the highest likelihood to start hitting new highs. We are in front of some resistance. That's pretty much always the case. After a big move, we find a new resistance. But we are right underneath a huge amount of liquidity that we have left multiple times without taking. 1, 2. And if we bother all the way to get in here, at the very least, if we can produce a higher high with a new all-time high, and then let's see if that's gonna hold. Let's see if that is gonna produce a blow off, completing a new double top or something, or if we can actually ignite that short squeeze, helping us entering into price discovery and into new highs. Ranges that I feel that are completely on top of the table for the upcoming weeks is 120 within that area. But we need to be also very careful in here. Hopefully you are already well positioned from the lows and not just considering to enter in here. You already missed the stupid train, and I don't agree with just buy Bitcoin at any price and hold it forever. In a year time, I pretty much feel like there is a 99.99999% chances that at these prices, if you buy Bitcoin next year, is gonna be a red bag. If that's not the case, I'm more than happy to say, well, I was wrong. At that point, I will have already distributed. And if the price is even higher, I just don't care because profits are profits. For a trader, there is no such a thing as missing an opportunity in a domain where opportunities are on the table every day. Thanks so much for watching. I'll see you in the next one. Bye bye.